All right, we should be good to go. But let's do a quick audio check, and then I'll get jumping right in. But happy Friday, everyone. Morning, Eric. Morning, Terry. Good to see y'all. All right, I'm going to assume you can hear me loud and clear, so let's get jumping in. We got a good 15, 20 minutes this morning, so I'll try to keep the spiel nice and short. But like we covered Wednesday morning, this week was very much like last week. So last week, get the big spike here for volatility, runs a good 2 or 3 ATR to the upside. And typically the rhythm there is that you get the big spike in VIX. And as the VIX goes +2, +3, down comes the market, -2, -3. So just like last week, we got the spike here, but also like last week, VIX comes right back down towards the 21. And as tends to be the case, once VIX kind of slows its roll and cools it down a bit, the market typically bounces back towards the upside. So you get a little bit of the flush here for the SPY. Nothing much happened here. We didn't even hit -2, but regardless, VIX spikes, market fades a little bit, VIX fades, back up goes mama market. So the SPY is looking good here, and then the Qs, who I've really not been a big fan of as of late, looking a lot better here. So with the spike in volatility, we did hit -2. With the fade in VIX, we're right back above the daily 21. So I do think tech looks a little bit better here. We'll talk about that in a second. But the major thing to focus on right now is the fact that we got a daily squeeze in the S&P 500. So we throw up the Bollinger Bands. This is big stuff. As a swing trader, this is your best window of opportunity. So when the overall market has a daily squeeze, should that squeeze fire long, there's your 1 to 2 weeks to really look to get aggressive within reason. Make sure you're taking proper position sizes, but with that momentum in the overall market behind you, there's a time to get aggressive. And then once the squeeze comes to an end, you more so go into a protection of profits mindset. So we got a good looking structure here to the daily squeeze. My mindset is as long as we can hold support above that daily 21, we should see a good couple of weeks of momentum here. And as far as what's the high probability move, +2 ATR to the upside brings us to a brand new all-time high, and +3, which I don't think we're quite going to get, would bring you towards 4,300. But regardless, you got a good structure to the daily squeeze. Should this fire long, and I think it will, there's your 1 to 2 weeks of momentum. So with that being said, you want to have a focus list ready of things you want to trade that have a similar structure, but are really going to thrive if the market does fire long here. So a couple of things I'm liking. I've been a big fan of the industrial sector. That led to a pretty nice trade on Caterpillar over here. With the flush in the market this week, it comes back down to earth, but you still have a nice daily structure. Good looking daily squeeze, stacked EMAs. So within the industrial sector, I'm still a big fan of Caterpillar. So for Caterpillar, we do got a couple of put credit spreads here, and all I'm looking for, if the daily squeeze in the market fires long and the daily squeeze in the industrials fires long, you're definitely not asking too much here to see Caterpillar head back towards new highs right around +2. So I do like to put credit spreads on Caterpillar, but within the industrials, there's a couple of good looking ones here. And I don't think you can go wrong with any of them. Triple M, this looks picture perfect, so I would like to put credit spread there. And I still think UNP. It's been a little bit sloppy over the last couple of days, but it didn't lose structure. The daily squeeze is very much intact as long as you're going between +1 and -1. So you get a little bit of noise in the market here, none of which I think should shake you out of the daily squeeze. So that's a good looking one. So I do like the industrials. And y'all know I'm a fan of the squeeze. So for conversation's sake, though the financials have been really strong, and should the squeeze fire along in the overall market, the financials are probably going to continue to go higher. I'm looking for that one specific setup. So I do like the financials, but not from the perspective of trading it because there's no squeeze. Market goes higher. The energy sector, which has been really strong here, that probably goes higher, but there's no squeeze. So that's why I like the industrials. And I also like, not the sexiest thing out there, but I like the real estate sector because I'm a fan of a squeeze. So stacked moving averages, green 10x bars, held up structure. And if you look within the real estate sector, just like we're doing with the industrials, find a good looking structure to the overall sector. Now let me go find my go-to setup within that group. So with real estate, if we look at a list here, and I can share this with y'all if you would like, but you got your different sector ETFs here, and these are the top 10 holdings in each of those sectors. So if we look at a few of them here for real estate, what you want to find is the individual stocks looking just like the overall basket here. So a couple of them, PLD, a good looking squeeze. It's already kind of hitting +2. So that's kind of off to the races without me. There's SPG. Beautiful daily squeeze, all on its own. That's the kind of chart you're looking for. When a chart has that kind of structure with a daily squeeze, holding between +1 and -1, positively stacked moving averages, it already has a good probability of making that +2, +3 move to the upside. But now if you factor in that the sector it belongs to, real estate, has that high probability set up, as goes the sector, goes the stocks, and then you take into consideration Big Mama has got the same high probability set up. You're stacking those probabilities. So I think anything within real estate, SPG, you've got EQR, they're all a little bit random, but they're beautiful setups. So I think if you're interested in something like this, and I'm not going to take a huge position here, but if you look at real estate, IYR, my mindset is over the next, call it 1 to 2 weeks, I think we can see some nice upside. Everything's lining up here. And then my go-to trade is always going to be that put credit spread. So I'm looking for about a 2-to-1 risk reward ratio at the very least. So maybe something along the lines of June 18th expiration, sell the 98 put, maybe go $3 wide here, 92 cents a credit, pretty close to a 2-to-1 risk reward ratio. So I'm looking for something like that. Nice put credit spread, looking for a move into +2, +3. So not the sexiest thing out there, but I do think it's a sexy structure, if I do say so myself. Now for the tech stocks here, like I mentioned, I haven't been the biggest fan of tech as of late because of the structure. The structure's kind of sucked. No positively stacked moving averages under the 21, and rejection, but with a nice bounce here, we can hold above the 21. I'm not looking for a move here higher immediately, but if we can just simply hold structure above that 21, taking into consideration the SPY has a daily squeeze, even though tech's been a little bit sloppy, I think it should benefit from the overall market firing long. So as long as we can hold that structure, which in plain English means keep your ass above the 21, what I am a big fan of here is Google. And what's nice about Google is very much like over here in that last daily squeeze, tech is sliding to the downside. So the Qs are going -2, -3. Google doesn't really flinch. Just holds up structure here in the daily squeeze, +1, -1, none of which should, I think, shake you out. Like we talked about Wednesday, that's just noise. So if you look at the new daily squeeze, it fades a little bit yesterday, but it didn't lose structure. +1 to -1, it's just noise. So nice recovery yesterday, good looking daily squeeze, positively stacked moving averages with the squeeze in the SPY, with the Qs getting a little bit better looking here. I do have a small position in a, what do I got? In small position is a relative term. June 18th expiration. And for those of you listening in right now, I'm curious, did anybody take this trade here with me in the options room? Only reason I ask is, I don't think I'm quite up $10,000 yet. Google is really good for having some funky P&L in the after hours. So, I don't think I'm up quite that much just yet, but I do love the position. So June 18th expiration, 2290 by 2270 put credit spread. As long as the Q's holding above the 21, something I would like to add to, and I'm looking for +2 to +3. I don't think you're asking too much here. So I think Google's a beauty, and within the tech sector, you still want to be really picky. Maybe tech is out of the woods, but be a little bit picky here. So I think Google with the daily squeeze, holding above the 21, stacked EMAs, that kind of structure you're looking for. And I think you can throw Facebook. Facebook looks damn good too. I think you can throw that into the mix. So as the market over here is getting a little bit choppy, it's holding structure really well, +1, -1, behaving good, stacked EMAs, daily squeeze. So I think the same thing here for Facebook. Squeeze fire as long for the SPY, +2 to +3. I think you can get a nice couple of weeks of momentum here. So it's not so much about the individual stock, for me at least. It's just about hunting down that same setup over and over and over again. So you look for a structure within the sector. That moment in time to get aggressive is when the overall market has that structure. And then I think you'd be super picky about the individual stocks you want to trade. So, how about Microsoft? Well, there's no daily squeeze here. It's under the 21. It doesn't have positively stacked moving averages. Should Microsoft make a nice move higher if the Qs go higher and the SPY goes higher? Definitely. But is that the kind of setup I want to make a living trading? Definitely not. So be picky. Google fits the bill. Facebook fits the bill. Caterpillar fits the bill. Triple M fits that bill. And then the real estate sector, pretty much everything within that group fits the bill here. So those are the kinds of things I want to focus on. But I do think, as the market is looking good here, keep an eye on a few basic things. The whole reason we're bouncing here is the same reason we bounced last week. VIX gave you the big spike and right back down to earth. If the market's going to fire that daily squeeze long without interruption, so to say, volatility's got to stay down here in this range. I mean, even better if it starts to fall to -1, -2, but at the very least, you want it clinging towards its 21. If we can see that out of volatility, just the structure across the board here implies a couple of weeks of momentum. Great looking daily squeeze in the index, but if we get another round of shenanigans here, could cause some interruption. So don't lose sight of volatility. And then as far as the weekly charts go, we did talk about a little bit of that structure there on Wednesday. We need the 8 EMA and the 21. But like I mentioned earlier this week, I'm such a fan of the weekly charts, not only for swing trades, but at the same time, just trying to tune out all that Monday through Friday noise, get a clearer picture of what's going on in the market. So a little bit of volatility this week, a little bit of choppiness, but from a weekly charts perspective, absolutely nothing happened. Positively stacked EMAs, green 10x bars, we're holding above the weekly 8, a daily squeeze on top of the weekly 8 with the weekly chart with that kind of structure. That's pretty bullish stuff. So the Qs, unless things get ugly here today, always that potential, they're going to check out just fine. And then the weekly chart here, the Qs, weekly squeeze, still got positively stacked moving averages. And the big line in the sand here for this week was that 21 EMA. And we're holding up really well. So anything can happen moving forward. Market's going to do what it wants to do. But from a weekly charts perspective, it's really easy to kind of get super, super bearish when the short term gets a little bit ugly. But again, the weekly chart here, what's it trying to tell us? You get a beautiful uptrend. You made a really good move, the average move, about +2 ATR, and you pulled back right to where you should pull back to. At least as of right now, this move down to the 21, no different than that one. And we didn't go back immediately, but you held structure, you got a brand new daily squeeze, and then you got the move towards the upside. So as far as the weekly perspective goes, everything's still checking out here. But that's the advice I got for you right now, gang. We all got different ways of going about it as far as our strategy. Do we buy calls? Do we sell calls? Whatever the case may be. The one thing I hope we can all be in agreement on is that we need momentum. When we got the wind at our back, that's really when it's go time here. So, of course, this daily squeeze could just kind of fall on its own face, and it's a big nothing. But regardless of that potential, you got to get ready to take advantage of this. We only get a few of these a year, and who knows if this is the last one for a few months. So my advice is, with proper position sizing, get yourself positioned. Industrials, Google, Facebook, real estate, something that already has a high probability setup. Because now if you got the wind of the overall market at your back, you're just stacking those probabilities even more. All that makes sense, team? Yeah, Nvidia. So Nvidia, I've been holding on to a today expiration. Today's expiration put credit spread with a short strike at 605 for like weeks now. Let's see where we are here pre-market. Oh no kidding. That's funny. I wrote that thing for dead. All right. I'm glad you called that out. Now I got to get ready here to do something with that. No freaking kidding. It has risen from the dead. So just one last note I'll leave you with credit spreads. If something quickly goes against you and you're looking at basically 90% of your max loss and you've got a good 3, 4, 5 weeks to expiration, you don't got too much more to salvage. And in the event you get a stupid bounce, like clearly the one we're getting out of Nvidia here, every now and then it can come back in your favor. Funny stuff. But listen, everyone, I got to hop off the mic here. Some of my simpler teammates got to jump on. So hopefully all that makes sense. I'll keep you updated. We'll be back on Monday for another pre-market stream. And then for those of you in the options room, I'll be seeing you about an hour and a half or so. So trade safe today. Be good. Behave this weekend. And I'll talk to you soon. Appreciate everyone's time.